Hello, my wonderful people. It is another day again, and as a Christian, as a believer, I declare that this is a day that the Lord has made, and we shall be glad and rejoice in it. So today I'm here to give you a continuation. Let me just say it is a continuation of the MACD because I received so many inbox messages, inquiring how I think whatever I gave, the description in the former videos were not so clear, or people are not able to pick it fast, or the zoom levels were a bit challenging. And if you're not keen, you will blow your account. So this that I'm giving you today, if you take it seriously, this will be your gold. It's a bit unfortunate that some people don't take these strategies that we give for free as valuable, and people will go wanting premium signals, subscribing here and there. But the truth is, if you're able to start with a free strategy, because for me, I give you this as a tip. This strategy I've used to make money, and it is still the backbone of my analysis. It is still the backbone of my trading. Okay, so let's get into it. So on the main chart, nothing much on the main chart. You can even leave it blank. For me, I have a former indicator which was a Bollinger Band and the moving average 200, but we are not going to use that. So ignore the Bollinger Bands and whatever is on the main chart. So we are going to use the window chart, and on the window chart two we have two indicators. Though I will want us we put a silent RSI. Okay, whatever you're seeing, the black thin line, I mean this, sorry, can't come this extend, I mean this extend. Hope you're seeing that small black thin line. It is very silent, sorry, it is very silent, but I will want us to set it so that it will help us. Okay, so these are the settings. We are going to use MACD. The MACD, these are the settings for the MACD 12.26.5. Apply to close. You can put whatever colors you want. Okay, and the MACD, you place it in RSI window. This is what I was saying, we put it as a silent color. So I've put it black because my background is black, but of course when it is portrayed on top of the MACD, it will show where it's passing. So, but I want it to be silent. It's not like the main indicator, but when I'm picking the signals, it applies in a very big way where it is placed at that time. So put it to be the same as your background color, and it's period 21, levels 1991, 10, 9, 10, 11. No, let's change the 11 one to be, sorry, let's change the 11 one to be 9, because 91 and 9 go hand in hand. So it is 9. So 9, 10, 1991, and then 50. Okay, and we are done. So there you go, 1991, 9, 10, and 50. That's it, done. And then we go back again. We had not finished, sorry. The last indicator is a moving average. It's moving average 5, shift 0, exponential, close, and put whatever color that you feel comfortable with. So let me look for a shouting color. That's it. So, and we are done. The indicators are there. Okay, so please take note. Please take note. We are going to use the last zoom level. Okay, we are going to use the last zoom level. The last zoom level. And it still applies like the previous strategies. And here we are going to wait until when the RSI, when not really the RSI, but the MACD and moving average 5 touches level touches level 90 there. Okay, but this time round we are going to do it in two phases. Okay, so I would really recommend you to wait for such a setup on 1 minute, and then you go to 5 minutes to confirm. Okay, so this is what we're going to do at this position here, where I had just placed the here, it touched. But again, when you move it like this, you find it shifting. Okay, so I want a place where both have touched down here. Okay, so when you find such a place, you draw a line to that exact place, and then go to 5 minutes time frame. You see, sorry, this first line was not, it was a previous signal. So then you come to 5 minutes timeline and see if it is touching. Sometimes both of them might not be touching, but we were initially on an uptrend, so it will be much easier for the signal to reverse and go up if it was initially on an uptrend. Okay, so take it from you see, it came like it was a small, so this was the previous top, came, went up halfway, then came down, then now, in my opinion, this was going to be like a major reversal going up, because the previous that had touched up was here. So it touched up, came to the middle, again middle, again, so it was like forming a W, and it was like retesting this level for the second time. So the chances of it going up was okay. But if such setups are a bit complicated, just wait for the setup in M5 now, like here. Okay, when the moving average touches level 10, sometimes it's a bit hard to get like this setup where both the moving average and you see, when you move it, you find the MACD is moving because you've squeezed the window. Okay, so you find the MACD sometimes not touching, but the moving average 5 has touched. So if it touches on level on M5, just know that on M1 it will also be touching. You see, like these setups, okay. Okay, so let's move back. You see, like this was an awesome setup. Okay, but mostly I would do it on M1, pick a point on M1, and then come and confirm it on M5. Okay, last zoom level. So I would comfortably pick a level on M1 like here. Let's take the top part, which is here, and go to M5. And when you go to M5, you will see that we were on a general from top to bottom. So here was a small retracement, and then from there we'll be going down. And do you see, from if you find such a setup, like it was at the peak at the bottom and then it's heading down, but this here is a small retracement, you can comfortably place your trade. Okay, as long as the moving average is not like showing properly, this moving average should not be above level 50, because most of the time you use level 50 as a take profit point. So if the MACD, yes, will go above 50, but the moving average will not go past 50. So with that, you will understand that it was a small retracement and it will go down. And you see here, the moving average is exactly at level 50. Okay, exactly at level 50. So from there, you can now place, because on M1, it was touching level 90. On M5, it is touching around level 75 and the moving average at level 50. Okay, so that can be a very wonderful setup. You can place that. So here is again another beautiful setup on M5 that both touched level 90, and when it touched level 90, it started reversing immediately. So if you are to use such a setup on M5 and then you come to M1, let's check where M1 is. Here, this is where our M1 is. You see? So on the main chart, you are supposed to have placed your trade there. You are supposed to have placed your trade there before it started spiking, because it was confirming on both M1 and M5. So you're supposed to have placed your trade there. So with this kind of setup, do you see you because of course on M1 it touches level 90 earlier before M5 touches. So this level here touches level 90 on M1, but on M5 it is not touching. So it will make you evade the fake signals, because you see it touched, then starts reversing. What I'm talking about is this here. It touched level 90 on M1, but on M5 it had not touched level 90. So it reversed a bit, then came the second time now to confirm that touching. Okay, so this second time when it is touching level 90 on M5 is your favorite place to place your trade. So you place your trade around here, and immediately after that, do you see the massive spikes that come? So where is your take profit point? Your take profit point should be at this point when it's touching 90. So I would probably quote those two massive spikes. Okay, so you place your trade here and you take your profit here. Take your profit here when it was touching. Okay, so all you need to understand is it's the same MACD strategy, only that you use M5 to confirm. Let the peaks be touching level 90 on both M1 and M5, okay, to avoid the false signals. And for this, you use it both ways. Let's look for buy signals. Like here, this is a very wonderful buy signal. Let's put a line. Here, that is a wonderful buy signal. Let's go to MT5 to M5. So forget this, forget also this. So this is the line that we are talking about now. Do you see that it had touched? As much as the MACD was not touching, but the 5-minute time frame was the M5 was touching. Okay, so when of course when you bring it forward, it will be somewhere along the midway, but yes, it was touching. Okay, so as in at that time it had stretched like this and it was touching. So you placed your trade there, and can you see, of course I would not use M5 to take my profit. I would go back to my M1. I would go back to my M1. Where was that? It's a bit far. Here it is. So I would still come back to M1. So where do I take my profit? I take my profit here. I take my profit here. When both the MACD and the moving average are touching level 90. So you would have probably placed your trade around here. And all these spikes caught you, but you took your profit there. Okay. So this is one strategy. And I tell you, with this trade here, you could have gotten not less than this here. This. You could have gotten not less than between 150 to 200 candles. That is a whole 3-hour trade. And a 3-hour trade, if you are able to calculate 180 minutes by this is a crash 1000. So 180 minutes by crash 1000, which is the minimum lot size of 20. So 180 minutes, you could have gotten around between 18 to 20 something dollars on the smallest lot size. Yeah, on the smallest lot size, because on crash 500, because crash 500 is 1 minute is equals to $1. Okay, 1 minute equals to $1. So crash 500 would have given you around if you have a very good capital and you say you put a lot size of 1, so that would have been a whole $180 if at lot size 1. If your capital is like around 1,000 and above, 1,000, 2,000, 5,000, so you can comfortably put one lot size. And one lot size for boom 500, 180 minutes would have given you $180 comfortably. And that you've not risked your account in a very big way, and at the same time you were so sure of such a kind of setup. Okay, so make sure you confirm these peaks, like it touches level 90 on both M1 and M5. Okay, it touches level 90 on both M1 and M5, and let it be you have how do I put it? You have squeezed to the last zoom level. That is the key point. Last zoom level. And especially when it is touching level 90, I was talking about this black line, the RSI, whatever, RSI 21. So if the two indicators are touching level 90, yet the RSI is way far below, like it's not both of them at the peak, so you know that we are ready to reverse, like it is showing a trend that is ready to break. It is not a continuation of the trend. Hope you understand. Come here, let me put the line there. Do you see where both the MACD and the RSI 21 are meeting at the peak? It showed you why I don't use the RSI to trade the reversals is because sometimes it goes to overbought levels and then it will crash once, or sometimes even it may fail to crash, continue with the trend. But you see here, it just crashed once to give it room for M5, to come and reach at the top. Okay, so basically this crash came to give room for moving average 5 to both reach at the top. Okay, so how do you know that it will reverse most of the time? You see, like here, it was like I would not have placed this because both of them were at the extreme, so the market was just ready to come back a bit to reset, then still go up. So it was not a major reversal, and you see it kept on like in a ranging way, coming down, going up, coming down, going up. A very comfortable signal that I will place is a signal where uh, where where it comes like this, like the MACD is way far from. Look at this again here. This is another perfect example. This, where the MACD is touching level 90. Sorry, it's disappeared, but I think I can find it. We were not very far. Here again, you see this, the MACD is way far from, when by the time the moving average 5 on the MACD is touching level 90, the RSI was far away. Okay, so that is to show you that we are not on a very strong trend and we are ready to reverse. Okay, so anytime you find such setups, look here, where the MACD is way far from where the RSI is. Okay, it's another wonderful setup. It's another wonderful setup. Look here again, where the MACD is very far from the moving average and the RSI. So that's another wonderful setup. So this is what I told you I could have avoided. If I was to trade going down, I would have avoided such setup where both peaks meet at the top. Okay, with such kind of setup, it is just always a reset, like one spike, and then it will still go up, trend continuation, and that is exactly what happened here until when moving average 5 reached level 90. Okay, so the one spike was just used to reset. So such setups, like when both the RSI and the MACD are at the top, it's never a very good setup. Such setup like this setup is the best, is the sweetest. Like when you see this, you are so sure that the market will reverse. Why? Because the MACD was not at the extreme buy. Okay, so for me, this was a sweet setup. And do you see how many minutes that was? This, all this up to here, from here. Okay, so key point to take from this strategy is let level 90 of the MACD and the moving average touch level 10 and level 90, and on 1 minute, and confirm it on 5 minutes. Okay, that is key point. If it is at both extremes on both time frames, then it is a good setup and you are so sure of a reversal. But taking the trade and profit take is on 1 minute, so you will place your trade here and exit when both are touching level 90 again. Okay, so that is your exit. So that's it for this strategy, and thank you for all who have joined our channel, downloaded our premium products, and even those who joined the VIP. And yeah, that's it. So happy trading and enjoy. Thank you. Bye.